This video is for beginner trader who want to learn how to do Elliott wave counting on real chart and how to get exact top like 1959, and what are the mistakes that beginner trader do and how you get confused. This is your real life example of Elliott wave counting. But before we start this video, if you read book and see the rule explained in this book, then book have this example which is for impulsive wave, but I will give you example where impulsive wave and corrective wave both are mixed and both are in extended format. Same like this, here you have three level of extended wave. Books giving you example of impulsive wave, but gold give you example of mix of both. The impulsive and corrective both wave in extended format, the example which is not in book. And for beginner trader, on home page of my YouTube channel I have this playlist for beginner. When you click on this link, the first video is for book. This is your number one task if you want to learn Elliott wave. What other people say, what you read in social media, it is meaningless. What is written in this book, only that thing matter to you. And there are two core rules of Elliott wave theory: the ABC wave or 135 impulsive wave. And you have to master, you have to understand how these two types of wave works and what is the difference between these two things. So all the video are already there in this playlist, but now I will give you example how you do wave counting on real chart. First of all, let's see daily chart. Before we do this wave counting from this bottom to top, one thing I always repeat: if you want to do wave counting, before your wave counting start, before price action start, two things you always need. How can you know that this ABC wave counting will end at 1959, and how you will know that bottom will be here right at 1614? These two things are most important. If you get these two numbers in advance, then you can do your wave counting very easily. Otherwise you will confuse and your wave counting can be wrong. To get this top, we are using this daily resistance. So if wave count end, then it should end near previous resistance. If top does not come on this resistance, then you will try next resistance. That is your first thing. And to get bottom, you must have complete understanding of previous wave counting. If you do not have this wave counting understanding, you cannot know that next level of wave counting will start from this bottom. And when these two things are done, your wave counting start. So because of understanding this previous wave, we already know that bottom can be at 1614. And now we will start wave counting. First, this is our bottom, then our first impulsive wave, which can be 1, or wave A. Both are possibility. Then come correction, which we can say second corrective wave or B corrective wave. Then this previous high breaks, market makes new high and it goes up, and this can be your third impulsive wave or C corrective wave. But after that correction comes again, and your next possibility is that this can be your fourth corrective wave, which say a new high will come and next wave will be 5. Or if these are ABC corrective wave, then you will call this top, and this correction is correction to entire trend top to bottom. And you will rename this wave counting again, and you will rename this higher degree wave W, then correction X, then next impulsive wave Y. But to get this top and bottom, we will use Fib retracement and extension tool. So this low you can get using Fib retracement tool. It was near 38% retracement. And to get high of wave C, we will use extension tool. And first is always 100% projection, then 38% projection, then 61% projection, and most of the time market stop after 161% projection, and most of the time market stop before it make 200% projection. But challenge is always same, that how you will know that these are 135 impulsive wave or ABC corrective wave. So this extension tool in advance is telling us that 1962 can be top for wave C, and if this level break, then next is 61% projection, then 200% projection, and before that 100% projection. But to know that where will be top of wave C, we will do wave counting on lower degree, which we call sub wave. And since you are doing wave count on higher time frame like daily, you have multiple option to get lower time frame like H4, then H1, then 30 minute, then 15 minute. And if you do wave counting on lowest time frame like 1 minute, then you cannot go to lower time frame for your sub wave, where you can verify your wave count. And now to verify that from this bottom to top near 38% projection target, we will verify sub wave on lower degree with Fib extension tool and retracement and all the wave counting rule. So next focus will be entirely on this wave C, and since this is daily time frame, for sub wave we will go on H4 time frame. But before we start our sub wave counting, we already have one information in advance, that top can be near 1962, because that is our projection target. And now we are on H4 time frame. This was your wave A of daily time frame. This was your correction, and this is your wave C of daily time frame. And our entire focus will be on this wave top to bottom. And we start wave counting from this bottom, which was near 1725. Our first wave 1, 2, 3, 4, and then final wave 5. 5 wave complete, and next level wave counting start from there. And we rename this entire wave top to bottom and say it capital letter A. And after A we need correction, that can be zigzag or flat correction or chart pattern. It is completely depends on market, but you have to consider all the possibility. Since wave A start here and wave B end here, this entire price action is your correction, and this was your triangle chart pattern correction. Wave A, B, C, D, E, and where wave E end, your corrective wave B also end, and your next wave C start. And understanding of all of this wave, this top where wave A is ending and this low where wave E ending, that's mean where corrective wave B is ending, is extremely important, because without understanding of these wave and these low and high, you cannot use extension tool. And if you do not use extension tool correctly, you will not able to get this top in advance. There can be $1 or $2 difference, that's not a big thing. And if you use extension tool in wrong way, then your difference can be $10 to $20, and that is a big difference. So after understanding of this ABC wave, we now know that next level wave counting start from this low. Then we start our wave counting. We call it impulsive wave 1, then correction wave 2, our third impulsive wave, then correction fourth wave, and final wave 5. And this third impulsive wave is again subdivided into lower degree, and we start wave counting again. Wave 1, 2, third impulsive wave, fourth wave correction, then final wave, which is ending with a ending diagonal chart pattern. And for beginner trader, from this top to bottom, this is complete confusion, because normal 135 wave counting, it is easy, anyone can do. If you read book only one time, then you can also do, that is easy thing. Complicated thing is always extended Elliott wave counting. And now I will repeat again from top to bottom. This is your corrective wave A, then correction wave B as a triangle chart pattern, and this is your complete wave C. And this wave C is subdivided into 5 impulsive wave, and this third wave is also again subdivided into 5 impulsive wave. So from this top 1959 to this bottom, there was 3 level of wave counting, and if you do mistake on any stage, your wave counting is wrong. And to verify this wave counting in advance, for wave C, our extension is 1901, that was 38% projection. Then that was 200% projection at 1953, but top was 1959, and you can see the H4 candlestick was showing a strong rejection above 1952. The projection target was 1953, while candlestick closing was showing strong rejection above 1952, while candlestick tail, if you see, the high was 1959. There is not a big difference, but your top was near 1953, and you got that top in advance when price was trading on final wave E. From this low to high, there was so much price action and so many time, but you get everything in advance. So book have example of extended Elliott wave, but this is mix here. Corrective wave and impulsive wave both are mixed. And if you focus again from top to bottom, then you will see that there was multiple stage of wave extension. This was your first extension, then this wave C was again extended into AVC, and that wave C of level 2 was again extended into 1 3 4 5 impulsive wave. And if you focus again, then from this bottom to top, the third wave was again subdivided into lower degree 135 impulsive wave. So that was total 4 level. 2 were corrective wave and 2 were impulsive wave. So first complicated thing here was doing wave counting on 4 different level, which is not easy for beginner. And second thing was ending diagonal chart pattern. So everything about how to do trading with ending diagonal chart pattern already explained everything in detail. But mistake everyone do as a beginner, that you do this first high and call it wave 1, then 2 3 4 and 5, and you say that diagonal pattern has been ending and you start selling. While trick, I repeat again in this video, that forget this first wave and start counting from this second wave, then you will get correct counting for ending diagonal chart pattern. And best thing about this ending diagonal chart pattern is, if you missed entire price action top to bottom, if you know nothing about all of this wave counting, you can sell right on this top and you can make money. But if you do not have complete understanding, you will sell and market will go up again, it will hit your SL or crash your account, then it will crash vertically. And all the wave counting from this top to bottom also tell future price action in advance, that next price action will be vertical or zigzag. You can know in advance because it is written crystal clear in book that after ending diagonal chart pattern, price action will come in vertical format. And there is one more thing is written in book, if you read carefully, if wave counting is extended in multiple level, and here from this bottom near 1620 to this top near 1960, all the wave count of multiple stage, all the extended wave were ending at the same time at 1959, And when this happen, when you have multiple extended wave, price action always after top is vertical. That is why before FOMC meeting I was saying in video that from 1930 to 1960 is my sale zone and price action will be vertical, because that was purely based on Elliott wave theory. But fundamental confirmation came later when NFP was public, ISM number, CPI and core PC, all of them number came later. While Elliott wave theory was saying that next trend which will go in opposite direction, that will be vertical. And if you mix two things, Elliott wave and news, then you can improve your trading performance at least 10x. And if you focus on this triangle chart pattern, when this final wave E was made, then your impulsive wave was started. Right here, everyone was confused. Seller were selling and buyer were buying. That is why we get triangle chart pattern. It was not symmetrical, but it was triangle. And symmetrical triangle definition is when buyer and seller are in equal force. And that thing was verified by price action. And when that breakout came, when this low was made of wave 2 on lower degree, all the economic indicator came one by one. NFP, ISM number, and ISM number was biggest thing which was super bullish for gold. And same ISM number right here near 1870, it was bearish. So you can see news and technical both were verifying each other. And ending diagonal, same as written in book, when FOMO buying happen, when trader do FOMO buying, then we get ending diagonal chart pattern. Everyone buy and they keep buying, but after ending diagonal pattern complete, market drop instantly in vertical line. And if I show you one more thing which always confuse beginner trader, this is your wave counting. And if you hide all of this wave counting, then this is just price action. And from this bottom to this top, if you only follow price action, then you see it is making higher high with higher low. And it was super bullish, and right at the top everyone was saying that buy at 1959, gold will go $2,000 tomorrow. That is price action, because based on price action it is super bullish and there is no reason to sell and all the reason to buy, because based on price action you will only sell when price make lower low with lower high. And on the same chart, if you do wave counting, then you can see with understanding of Elliott wave theory, it is saying that entire trend from top to bottom has been ended and you should sell. And your target is 1953. And after all the news from NAP, to PCE news in last. Everything was crystal clear that you should sell. But that was too late. All the opportunity were gone. So Elliott wave theory is very advanced compared to price action and is also advanced compared to macroeconomics. Is always tell top and bottom before news public. Before news say that this is trend reversal. And most dangerous thing about Elliott wave theory, it is most aggressive. Because if you hide this price action and now you see, then psychologically it is almost impossible to sell at 1959 because Elliott wave theory is so much aggressive. It is like jumping in front of running bus. But Elliott wave is only theory which can tell market top and bottom in advance. But its secret completely depend on your correct wave counting. If your wave counting is wrong, then you cannot get top in advance. And for beginner trader, all of your question that was possible wave counting before price hit 1960 resistance. If you have any question, you can ask on Instagram, and this is genuine link. All the other Instagram account are fake. Make sure this spelling is right. So you can ask your question on Instagram. You will get your reply within 24 hours. Or you can directly share your chart on TradingView. Compared to Instagram, it is almost impossible to make fake profile on TradingView.